All right, welcome back to Talk Tickers, where we like to get into these earnings calls and really break them down so you don't have to. And today we're going to be diving into Tyson Foods' first quarter 2025 performance. It is February 3rd, 2025, and they just dropped their report. But we're not just going to be looking at the numbers. We're going to try to get into the story that these numbers tell about the state of the protein market, what Tyson's game plan is, and what it means for all of us out there, whether you're an investor or just someone who likes to eat meat.
Yeah, should be a pretty fun deep dive. Tyson did have a really strong start to the fiscal year. They exceeded analysts' expectations and even raised their full year guidance.
Yeah, they really knocked it out of the park. Sales were up a respectable 2%, but I think the real story here is adjusted operating income, a staggering 60% increase. That's huge.
Yeah, and that translates to an even more impressive 65% jump in adjusted earnings per share. And this marks their third consecutive quarter of year-over-year growth. So, that signals some serious positive momentum for the company.
Definitely. All right, let's break down this protein-packed performance by segment. We're going to start with chicken. It seems like everything's coming up poultry for Tyson.
Yeah, absolutely. They had a record-breaking quarter in chicken. They achieved their best Q1 adjusted operating income ever, and it's their strongest performance in the last 8 years. So that tells us a lot about their operational improvements, how they're leveraging lower grain costs to their advantage.
And I think this is important for everybody out there, even if you're not like a chicken aficionado. The fact that they're seeing this volume growth, especially in the recovering food service sector, that just tells us a lot about, more people are eating out, they're choosing Tyson chicken.
Yeah.
That's a good sign for consumer confidence economy as a whole.
Absolutely. Now, beef, a little bit different story. We're kind of in the midst of a cattle cycle, which means limited supply, and what's leading to kind of squeezed margins. It's a tough landscape, but, Tyson's performance was better than anticipated.
So how are they weathering the beef storm? Are they just magically making more cows appear?
Well, not magic, but, demonstrating a focus on what they can control. They are enhancing efficiency. They're shifting their product mix towards higher value items. They're really aligning their operations with demand. So, think premium cuts, specialty products. They're kind of playing it smart.
That's some strategic butchery right there. How about pork? Did they bring home the bacon this quarter?
Pork performance was in line with expectations. However, they are facing compressed spreads, meaning, the difference between the price they pay for hogs and the price they sell pork for is shrinking.
So they're making less profit per pound of pork. That can't be good.
Well, it's definitely a challenge, but Tyson is tackling it head on with operational improvements. By streamlining their processes, making them more efficient, they're mitigating the impact of these tighter margins.
Makes sense. All right, let's move on to a segment I think a lot of our listeners are going to be interested in. Prepared foods.
Yeah.
Think convenient, ready-to-eat meals and snacks. Like those iconic Jimmy Dean breakfast sandwiches.
Exactly. Prepared foods are on track to hit their targets, fueled by strong innovation and gains in distribution. So not just creating new products, but they're finding new ways to get them in your hands.
It's like they're building a procurement pipeline straight to your fridge. Okay, last but certainly not least, we got to go global. We got to talk about Tyson's international performance. This isn't just a domestic player anymore.
No, they're making waves globally. They achieved a record adjusted operating income internationally, particularly strong in Asia. So, this international growth could really be a major driver for Tyson in the coming years.
Yeah, Asia's a huge market. You got a rapidly growing middle class and increasing appetite for protein. I think Tyson's tapping into that demand is a brilliant strategic move. All right, so we've seen that, Tyson's firing on all cylinders across these different segments. But what about the bigger picture? How's their financial health? What's their overall strategy?
Well, that's where things get really interesting. They are laser focused on cash flow and financial stability. They have significantly reduced their net leverage from 4.1 times at the end of 2023 to a much healthier 2.3 times now.
Wow, that's a pretty dramatic improvement.
It really is. And this financial discipline, combined with their careful management of capital expenditures, gives them a lot of flexibility. They can invest for future growth and return value to shareholders. Speaking of which, remember that recent dividend increase?
Ah, yes, music to any investor's ears.
Yeah.
Clearly. Tyson is a company that prioritizes shareholder value. All right, so before we kind of dig a little deeper, let's recap the key takeaways for our listeners. What's the headline here?
I think the main takeaway is that Tyson's strategy is working. They're delivering profitable growth. They're improving efficiency, they're building financial strength, all while navigating a, pretty challenging market.
Yeah, it's like they're soufing this protein ways and somehow managing to stay balanced, even when the market throws, some gnarly wipeouts their way.
Exactly. And this positions them incredibly well to capitalize on, the growing global demand for protein, both here at home and abroad.
Okay, now for the part you've all been waiting for. The moment where we put on our speculative hats, it's time for... This is not financial advice, but imagine this.
Tyson, fueled by their success in prepared foods, sets their sights on Asia's burgeoning vegan market. Could they be the unlikely champion of plant-based protein in a region traditionally known for its meat consumption?
It's a bold move for sure, but it makes you think. Now, before we get too carried away with our hypothetical plant-based empire, let's kind of rewind a little bit and delve into some of the specifics from this earnings call. I think there's some hidden gems in here that we should explore further.
Yeah, agreed. I think the real insights often lie in the details.
Yeah, so for instance, in prepared foods, they mentioned some significant progress with their operational improvement initiatives, exceeding their targets for production output and efficiency gains, reducing the impact of excess inventory, lowering overhead costs. Basically what we're seeing here is they're becoming a well-oiled machine. They're squeezing more profit out of every dollar.
Yeah, it's like fine-tuning a high-performance engine. Even small adjustments can lead to significant improvements.
Exactly. And, those distribution gains we talked about in prepared foods, that's not just luck. They're actively driving this expansion. They grew market share in their core 9 categories, with bacon, snacking, and smoked sausage leading the charge. Bacon, who can resist bacon?
It's a timeless classic for sure. And what's fascinating is, how they're weaving innovation into these classic products. It's not just selling plain bacon anymore. It's different flavors, different cuts, different ways to use it, really meeting the needs of, evolving consumers who are always looking for something new.
Absolutely. It's like they're not just selling you a product, they're selling you an experience.
Yeah.
And, innovation also plays a key role in their overall strategy. They highlighted how growth from innovation is driving momentum. And, we know from past reports that they've been investing heavily in new product development.
Yeah, and it's clearly paying off. They specifically called out the success of their Jimmy Dean griddle cakes, which have surpassed $100 million in sales in the last 52 weeks. So, that's no small feat.
No, not at all. They're taking these iconic brands and making them even more relevant, to today's consumer.
Yeah.
A brilliant strategy for long-term growth.
Yeah, it's evolution, not revolution. Now, circling back to chicken, remember how we discussed their return to volume growth? It's not just about producing more chicken, it's about profitable growth. And, they're really emphasizing their value-added products, which, for those who aren't familiar, are, products that go beyond just the basic commodity. So think pre-marinated chicken breasts, ready-to-cook meals, those individually packaged chicken tenders.
Yeah, those value-added products are a lifesaver for, busy weeknight dinners. But it's not just about convenience. It's also that, these value-added products command higher prices, better margins for Tyson. It's a win-win.
Exactly. And, they're not just focusing on the product itself, they're also strengthening their partnerships with key customers. They really emphasized building those long-term, mutually beneficial relationships, which helps them kind of grow the category together and, improve order fulfillment rates.
Yeah, collaboration is key, in a competitive market like chicken. Speaking of collaboration, let's talk about something that's near and dear to, I think, every investor's heart. Cash flow.
Cash flow, the lifeblood of any business.
Couldn't agree more. And, Tyson is making it a top priority. They highlighted, their disciplined approach to capital expenditures, meaning they're being smart about, those big investments. And their careful management of working capital, making sure that they have enough cash on hand to kind of keep things running smoothly. And this has resulted in some really impressive cash flow numbers.
Oh, yeah. They reported $1 billion in operating cash flows in the first quarter alone. And after you factor in their capital spending, that translates to $760 million in free cash flow. So that's a lot of financial firepower at their disposal.
It's like they've got this protein-powered money cannon. But, they're not just, stockpiling cash. They're using it strategically. They returned $175 million to shareholders through dividends and, as we mentioned earlier, even increased that dividend payout.
Again, demonstrating their commitment to rewarding investors. They're also using that cash to bolster their balance sheet. Remember that impressive decrease in net leverage that we discussed earlier? Well, that's partly due to their disciplined cash management.
Yeah, it's all connected. They're generating cash, they're strengthening their financial position, they're rewarding shareholders. It's a pretty solid recipe for success.
Absolutely. They're not just focused on short-term gains. They're playing the long game, and that's a reassuring sign, I think, for investors.
Now, it wouldn't be a true deep dive if we didn't acknowledge some of the challenges that Tyson's facing. No company is immune to headwinds, and Tyson is no exception.
True, transparency is important, and they were very upfront about the ongoing difficulties in the beef market.
Yeah, that cattle cycle we discussed, it's not going away anytime soon, and it's definitely putting a squeeze on their margins.
But what's impressive is their response. They're not just sitting back and complaining, they're actively managing the situation.
They're focusing on operational efficiency, being strategic with their procurement, diversifying their product mix to emphasize those higher margin items. It's about adapting and finding ways to thrive even when the market throws, a curveball at you.
Exactly. And, they're also adapting their operations to align more closely with actual demand, which, helps reduce waste, optimizes resources. It's a lean and mean approach.
Another challenge that they mentioned that kind of caught my attention was the impact of input cost inflation on their prepared food segment. They said that, it put some pressure on their margins in the first quarter.
Yeah, this is something that's affecting many companies right now. Rising costs for ingredients, packaging, transportation. It's squeezing profit margins across the board.
It's like a protein price pinch.
Yeah.
But, Tyson's not just passively accepting it, they're actively looking for ways to mitigate those cost pressures.
Yeah, they talked about, optimizing their operations, expanding distribution, launching successful innovations. All of these strategies can kind of help them, offset those rising costs and protect their margins.
Now, one aspect that I don't think received a lot of attention on the call, but, is worth highlighting is their international growth strategy. Remember those record-breaking results in Asia.
Absolutely. And, that's not a coincidence. It's part of a deliberate plan to expand their global footprint.
Yeah, they see enormous potential, in markets like Asia, where the demand for protein is just, skyrocketing.
Yeah.
And, they're not just exporting products, they're building a presence in those markets.
Yeah.
They're investing in local production, distribution, which I think is a smart move.
Yeah, it allows them to kind of tailor their offerings to local tastes and preferences, increasing their chances of success. It's a very nuanced approach, recognizing that what works in one market may not necessarily translate to another.
Okay, so now I want to shift our focus to something that, I think is often overlooked, but absolutely critical to Tyson's success.
Yep.
And that is their workforce.
The human capital, the engine that drives it all.
Exactly. And, they have over 138,000 employees worldwide.
Yeah.
And, they're constantly looking for ways to, attract, retain, and develop top talent.
Yeah, they mentioned their focus on providing, competitive compensation and benefits packages, which is essential in today's, competitive labor market.
Definitely. And, they're also investing in training and development programs to make sure that their employees have the skills they need to, succeed and grow within the company.
It's about creating a culture of growth and opportunity, which is, crucial for employee satisfaction and, the long-term health of the company.
Now, here's something that really stood out to me. They talked about how their team members are continuously engaged in, contingency planning to minimize business disruption from, trade or supply chain changes.
That's incredibly proactive. It shows that, they're not just reacting to events as they unfold, they're thinking ahead and preparing for potential disruptions.
Which is, essential in today's kind of volatile global environment. They specifically mentioned tariffs and how they're leveraging their global expertise to identify the best markets for their products amid, evolving trade policies.
It's a delicate balancing act for sure. They have to navigate these complex geopolitical issues while, meeting the needs of their customers and their shareholders.
Yeah, and I think they're doing a pretty commendable job of walking that tightrope. All right, well, let's lighten things up a bit. Let's kind of revisit that, outrageous but plausible trade idea that we pitched earlier.
Ah, yes, the plant-based protein play in Asia. Bold move.
But what if they took it a step further? What if instead of just, acquiring a plant-based protein company, they created their own brand from scratch?
Whoa, that's even bolder. But,
Yeah.
it would give them complete control over the product, the branding, the messaging.
Yeah, and they could position it as, a premium offering, catering to the growing health and wellness trend in Asia.
Aw.
A market that's increasingly receptive to, plant-based alternatives.
Yeah, it would be a way to tap into, a whole new market segment and further diversify their portfolio. Imagine, Tyson the meat giant becoming a leader in the plant-based revolution.
They could leverage their existing distribution network, their marketing expertise, really gain market share quickly. Of course, it's not without its risks.
It's a high-risk, high-reward proposition. But if they pull it off, it could be a game changer.
I'd love to hear what our listeners think about this. Do you think Tyson should go all in on plant-based protein in Asia? What are the potential risks and rewards? Hit us up on social media. Let's have a conversation.
It's a fascinating debate. And, even if you believe that plant-based protein is just a fad, the fact that Tyson is considering this move just speaks volumes about how the food industry is changing. They're not afraid to adapt and evolve to meet, these shifting consumer preferences.
Exactly. I mean, it's that kind of, forward thinking that has made them a leader in this market for, almost a century. But before we, get lost in the future of food, let's bring it back to the present. What do you think is like the most significant takeaway, for our listeners from this, deep dive into Tyson Foods Q1 earnings? What should they be paying attention to in the coming months?
I think the overarching takeaway is that, Tyson is a company that is firing on all cylinders. They're executing their strategy effectively. They're tackling challenges head on, and they're positioning themselves for, long-term success.
They're not just surviving, they're thriving,
Yeah.
in a market that is very complex and constantly changing. I think that's something that investors and consumers alike should, pay attention to.
Absolutely. Whether you're an investor, a consumer, or, just someone who's interested in the future of food, Tyson Foods is definitely a company worth watching.
Well said. Well, that wraps up our deep dive into Tyson Foods Q1 2025 earnings. We hope you found it insightful. And as always, we encourage you to stay curious, keep learning, and never stop questioning.
And be sure to check out Talk Tickers for more, in-depth analyses of earnings calls. We're here to help you kind of decipher the numbers and uncover the stories they tell.
Until next time, happy investing and bon appetit.